So let's get into the today's part. In our first class, we completed the unit number 8. Then we started the unit number 9. So in unit number 9, uh, we completed up to the 2016 paper. Yes, we did the 2016 paper. Today we have to do the 2017, 18, 9. So these are the 3 papers that we have to do today. So I'll give you a couple of minutes. Quickly try the 2017 questions. So let's discuss the 23 and 24. From the above, which caused to increase in the balance in the bank account than the balance in the bank statement. So they are telling our bank account balance should be more than the bank statement balance. First one, check deposited, not yet realized. And what you have to understand, if you have deposited a check in our accounts, we have increased the balance by putting it to the debit side. But in the bank, it is not yet recorded because in the bank it is not yet realized. No. So in the bank statement, that balance is not there. That check deposit is not there. Then if that's the case, obviously our balance will be more than the balance which is there in the bank statement. So that is the reason. Second, direct remittance received to the bank from a debtor were 2,500. So here what you have to understand, a debtor has directly gone and put the money into the bank. So in the bank, the balance is more because we have not yet recorded it. We didn't know about it. One of our debtor has directly gone to the bank and deposited the money. So in the bank statement, balance is high. The bank statement, they have more balance than the balance which we have in our accounts. Because in our accounts, it is not yet recorded. So that is, bank statement is high. Bank statement, not our account. Next up. Insurance payment on the standing order. So through a standing order, bank has directly paid that money. That means from the bank statement, it has been reduced. From the bank statement, that amount has been reduced. From our accounts, that reduction has not happened yet. From our accounts, that reduction has not happened yet. That means our account balance is bigger because from the bank statement, it has been reduced. Statement taking already because they have made the payment. Bank has made the payment. So they have reduced our balances in the bank statement. But in our accounts, my accountant has not yet reduced it. So my accountant's balance is more, bank statement balance is less. So our account balance is more. Then the correct answer is A and C. It's there in the third option. So next what they ask me, the adjusted bank balance as at 30th September 2017. So here we had a balance of 14,100, which is a wrong balance, incorrect balance. Then we have to find the correct balance. So let me prepare the account here. Adjusted bank account. Here I'll start with the wrong balance, 14,100. This one is going to the bank correctly. This is going to the bank correct. These two are not recorded in our accounts. Direct remittance received, not recorded in our account. So when we are recording it, receipt, no, we received it. Our cash is increasing. Sorry, our bank is increasing. Debt. Here, insurance payment. Payment, no, money is going out. No. Bank is decreasing 3,500. It's insurance. Then let's find the corrected or adjusted bank account balance. Here 16,600. 16,600. Then here we are getting a value of 13,000. 13,100. 13,100. So this is the corrected balance. You can take it to the other side, BDF, corrected BDF. It's not adjusted, 13,100. So let's see 13,100 is there in which option? That is also there in the third option. So now do the next question, a 6-mark question. I'll give you maybe 2 minutes. Quickly do it. I'll give you 2 minutes. Okay. So let's discuss the bank account prepared by the business and the bank statement received from the bank for the month of September is as follows. So when you are looking at the balances, end of the month, our accountant is telling we have 16,500. Bank is telling we have 23,500. So there is some problem. So this is B.C.E. If you take it to the other side, 16,500 is the BDF. Our accountant is telling 16,500, bank is telling 23,500. So there is a problem. So we'll try to figure out the issues. We'll pick one by one. Opening 18,500, statement also 18,500, not a problem. So we learn whatever the item which is there in our debit side, we have to check it in the credit side of the bank statement. Our debits, we have to check it in the credit side of the bank statement. Our credits, we have to check it in the debit side of the bank statement. So I will erase it. So whatever the debit side items, we have to check it in the credit side. Huh? Check 562,518, 9,000. It's there. 9,000, 562,518. Check 336,215. 336,215 is not there. So let me put a circle and. So what is the meaning of this check? We have deposited, not yet realized. We have deposited, not yet realized. Unrealized checks. Let's see the credit side ones. Our credit side for the bank statement debit side. Huh? Our credit side for the bank statement debit side. 667,615. 667,615, 3,000, it is there. 667,616, 4,000. That is also there. 667,617, it is not there in the bank statement. So it is there in our account. It's there in our account. We have issued a check, but in the bank statement it is not there, means other fellow has not gone to the bank yet. Other fellow has not presented it to the bank yet. So this is unpresented checks. So generally in the debit side, you can find the unrealized checks. Credit side, you can find the unpresented checks. Generally. In the debit side, you can find the unrealized checks. In the credit side, you can find the unpresented checks. Now let's go to the bank statement. In bank statement also, two items have not been. These two items. So what are these two items? These items are not recorded in our account. These items are not recorded in our account. So if it is not recorded, we have to record it. Simple as that. So let's start with the adjusted bank account. Adjusted bank account. We'll start with the wrong balance. How much is this? 16,500 is wrong. Now it's wrong balance. So we are going to find the correct balance. Why it is wrong? Because these two items in the bank statement not recorded. Direct remittance is not recorded in our accounts. Standing order insurance is not recorded in our account. So let's record it. So direct remittance means we have received money. So we have to increase our bank debit side, statement credit side in our accounts debit side. What is the value? 8,000. Direct credit. Next one. Standing order is a payment dilemma. So in the bank statement debit side for our accounts, it should come to the credit side. Standing order. Standing order payment for the insurance, right? So the insurance. The amount is 5,000. Then here 24,500. 24,500. Then corrected BCD 19,500. Corrected BDF 19,500. Now we can prepare the bank and reconciliation statement. Bank reconciliation statement. Adjusted bank account balance 19,500. 19,500. There is something you have to add, there is something you have to minus, reduce. Remember, plus the P. Reduce the R. Plus P, P, P. R, 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 R. Reduce the R. P means unpresented checks. R means unrealized checks. So in this question, we had a unpresented check and an unrealized check. Unpresented check is 667,617, 20,000. 667,617, 20,000. 39,500. And we had unrealized checks. Check 336,215. 336,215. What is the amount? 16,000. Then here we are getting a balance of 23,500. Balance as per bank statement. Balance as per bank statement. So you see here, balance as per bank statement 23,500. That means our calculation is 100% correct. So if you want, you can quickly write it, take a screenshot, whatever. We are doing the past papers, I have told you. I will be not giving extra time. When I am writing, you have to write at that time itself while listening for the explanation. So if you are done with that, Lamai, you can start doing the 2018 paper. Start doing the 2018 paper. Okay, time up. Let's discuss. The credit balance of the bank statement of Kapila's business for the month of October 2018 was 12,000. So this is a credit balance in the bank statement. We study whatever the our debits bank statement credit, because bank statement is with the bank book. Whatever our credit bank statement debit. So they are telling bank statement credit balance. The bank statement credit balance means our debit one, sir. Our debit side one. Okay. So our debit side means it's our asset. Well, liability should be there, the credit side. So let's see what's the correct answer. An asset of the business, a liability of the business, an asset of the bank, a bank overdraft of a business. It's an asset of our business because our asset, the debit side means our asset. First one is the answer. Question 6, part 2. What is a bank statement? It is a statement which is sent by the bank where a business has done a transactions through the bank. So whatever those transactions done through the bank current account generally. So those transactions will be mentioned in the statement and it will be sent to the address that we have given. So in simple terms, statement prepared by the bank by mentioning the transactions a business has done for the bank. Okay. The next one, state 2 reasons for the difference between balancing the bank account and the bank statement of a business. So we learn a lot of reasons. There can be unpresented checks, unrealized checks, and standing orders, checkbook charges, bank charges. I'm writing short form. You write it properly, yeah. Bank charges, then direct remittances. So these are few examples. Okay. So now let's move to the next one. The debit balance of the bank account of debit balance of bank account, our account, debit balance. Supplement's business as at 31st October 2018 was 16,000, but balance of the bank statement on that day did not match with the balance of the bank account. Later, the following were revealed as the reason for the differences. First one, deposited, not yet realized. So, unrealized checks. We'll go to the reconciliation. Bank charges not recorded in our. So, it will go to adjusted bank. Check issued, not presented, unpresented checks. Unpresented checks will go to the bank reconciliation. So there are two items now. One is unrealized checks, other one is unpresented checks. And if there are any bank errors, it will also go, but for all bank errors generally is not there. Direct remittances received from the debtor. So adjust this is also will go to the adjusted bank account. So let's prepare it, Lamat. Adjusted bank account. Wrong balance. How much is that? 16,000. 16,000. Then here we have a second one and the fourth one. We'll go to the adjusted bank account. Bank charges. Bank charges means our bank balance is decreasing. It should go to the credit side. Bank charges. 500. Next one, direct remittances. Direct remittances means we are getting money. Our bank balance should increase. Debit side. Direct remittance. What's the value? 2,000. Then here 18,000, 18,000, 17,500. Correct. Then reconciliation statement. We have to start with the corrected bank balance, not adjusted bank account balance. Adjusted bank account balance. 17,500. Then plus the P, reduce the R. Plus the unpresented checks, reduce the unrealized checks. So unpresented check we have 8,000. Unrealized checks 5,000. 8,000. Unrealized check 5,000. Then here 25,500. Then here 20,500. Balance as per bank statement. The balance as per bank statement. So better to write the date also. Better. It's the date 31st October 2008. That so 2019 also there are a couple of questions. I'll give you like 5 minutes, Lama. Quickly. Okay. First, we'll discuss the MCQ questions. After that, I'll give you some time to do the big question. Huh? What is the reason that does not become the cause of difference between bank statement balance and the bank account balance of a business? Check deposited but not have been credited to the bank current account. So people, this is unrealized checks. That is an item which will cause a difference. Second one, bank charges are charged by the bank but not recorded in the bank account. Bank charges not recorded in our accounts will cause a difference. A check issued for electricity bill and paid by the bank. Paid by the bank. Bank has paid it. We issued a check. If the bank doesn't know about it, then there will be a difference. That's what unpresented checks means. Presented checks means other party has not presented the check to the bank, so bank is not aware about it. Bank को दंड है ऐसा. Now, in this situation, we issued the check, we recorded in our accounts, and bank has made the payment also. The bank has made the payment because they knew that we have issued a check. ඒගොල්ලෝ දන්නවා අපි check එකක් issue. They knew. They have made the payment, then probably they also might have recorded. So this will not cause a difference. A check deposited directly, data, direct remittances. Direct remittances, until we get the statements, we will not know. So your answer is the third. Third one is the answer. Question 20. A check of 20,000 issued to a creditor was dishonored. Because of this, in the business. So if we issue a check, what we will do, we will credit the bank account and we will debit the creditor account. Because we are issuing, we are making a payment, cash is going out from the bank. The bank balance is decreasing. From other side, creditor balance is decreasing. Okay. Now what has happened? This check got dishonored. So if this check got dishonored, ideally what we should do, we have to put it to the debit side, and here we have to take it to the credit side. That's what we have to do. Now let's read the requirement of this question. The requirement of this question is, because of this in the business, bank balance increases and credit balance also increases. Yes, correct. No? So if there is a dishonor, we will put it to the debit side of the bank. Reversal. So reversal is because of the rejection, check rejection, debit the bank. Bank debit means bank balance is, we should increase the balance. Credit the creditor. Credit is a liability. Liability getting credited means it is increasing. Liability increasing, asset is increasing. So the correct answer is the first one. Bank balance increases, credit balance also increases. So I'll give you a few minutes. Try the question number 2. Not question number 2, the question number 6. Okay. So let's do the question. What is the requirement? They're asking us to prepare the bank statement. Whose business is that? Sans business. Sans business. Bank statement. Bank statement. for the month of March 2019. March 2019. So bank statement has three columns, you know. What are the three columns? One is the debit column, other one is the credit column, and other one is the balance column. So we'll start with the opening balance. 1319, 1319, date, and the description. Balance BF 11,000. 11,000. So what you have to understand, whatever the our debit items, so these are deposits. Deposits means our debit. Our debit items in the bank statement, it should be credit side. Bank statement, it should be there in the credit side. And it will increase the balance. Still increase the balance. Whatever the deduction, our credit, our account credit. Our account credit means bank statement ke debit side diyan. The bank statement debit side should be a reduction of the balance. It should be a reduction of the balance. So make sure to look at the date and record it properly. I have seen a lot of students, they miss the date. So do not miss the date, check the date properly and record. So next we have 2, 3. 2, 3. Cash. In the bank statement, we have to record it to the credit side, 20,000. So credit side items will increase. Debit side items will decrease the balance. 31,000. Then we have 4, 3. 4, 3. Check number 352301. Wages. Three five two three zero one. The amount 10,000. So we still reduce the balance. Huh? 31,000 minus 10,000, 21. So reduce the balance. Next one. 5, 3. Check deposit. 5319. Check deposit. What's the number? 758011. What is the amount? 22,000. 22,000 will increase 43. Why did I write it credit side? Because it's a deposit. Deposit in the bank statement, it should go to the credit side. Deduction should go to the debit side. Next one, we have 15.3. Direct remittance. 15.319. Direct remittance. Amount 15,000. And this will go up to 58,000. Then we have issued a check to Tusita 352302. Tusita 352, 302. The amount is 20,000. Reduction, so it should come to the debit column. Then 38,000 reduction. That's the date 25/3. The last one 33. Bank charges. What's the value? 3,000. 3,000. It will reduce a bit. It will reduce 35,000. But so that's the part A of the question. Part B, what are they asking? Name an item, one item, which should go to the adjusted bank account. So we can name two. Direct remittance is there. 15,000. Bank charges 3,000. Both the answers are correct. So if you are done with this, you can start doing the questions from unit number 10. I'll keep the screen for like another 1 minute. So you all can start doing the questions from unit number 10.